Good afternoon. This is Keith Brown in Moultrie, Georgia, with some cash commodity commentary for you. Really had some very two-sided trading today. Spot cotton was down about 80 points after posting about an 800-point rally this week. I think it's going to go up around a positive 5.5 cents from last week, so pretty encouraging there. The back months of the cotton complex were higher, so I'm sure that's a little bit of spreading on there. This sounds a little crazy, but today is the 25th anniversary of the 1987 crash of the Dow Jones stock market, and so that Dow is down 220 today. And I think it sounds, again, silly, but who wants to buy something on a Friday? A lot of superstition, I guess. Nonetheless, it seems to me cotton would like to move a little higher in here. We do have 2 weeks till the options expire, so the market could stay very two-sided in here. But nonetheless, we're not wholesale bullish to the market, but certainly won't defy what's happening. And we have one more swoosh to the upside. We would certainly encourage producers to maybe think about doing some pricing. You can just call us and we can discuss that with you. The grains today all mixed up. It looks like the wheat was the strongest because the Russians and/or the Ukrainians are going to put a halt to wheat exports. That has not new news. That's one reason we drove up some yesterday. But wheat continued to stay, pardon us, a little strong today. Really the strongest on the board, up 5 and 6 cents across the board. Basis tightening a little bit. Corn today basically unchanged, but held its own. The basis in corn's tightening a little bit, and we like to think that the seasonal low is in for the corn market. Come Monday, we should be at least or close to 90% gathered on the national corn crop, so that does alleviate a lot of automatic hedge selling. Over in the beans today, they were back and forth, and will close down somewhat. The bull spread still essentially worked in the beans, and we think that's something of a telling indicator. We also are waiting to see what the crop harvest progress will be. I think that will be way high, which will, again, like corn, will alleviate a lot of the selling that has been dogging the market somewhat, and you might start to encourage a little bit of speculative buying as it comes into the market. Again, we're going to have the greatest amount of corn and beans for the year in our hands, and that inventory will be shuffled away to commercial elevators, private owned farm storage, or even end users. So the markets will start to seek a level of demand, and hopefully we can start to gird the market a little bit higher, even thinking about into next year. Of course, there is to be a new supply-demand number come November. Fuel today sharply lower because of the crude oil being up, the dollar being up. Crude oil down $2, gasoline down about 5 cents, heating oil down about 4 cents. So that's a good thing. At any rate, give us a call if you have any questions. 1-800-910-1910. Have a nice weekend.